UK. When you invest in one, you're not buying one stock. You're buying hundreds of companies at once with just a few clicks. Why this matters? You don't have to research individual companies. You don't need to time the market. You don't need to stay glued to financial news. It's hands-off investing, perfect for people who have full-time jobs, families, or simply don't enjoy analyzing markets. Think of index funds as a slow cooker. You set it, forget it, and over time, it delivers results. Individual stocks. Total control, total responsibility. Now let's flip the coin. Buying individual stocks means you choose exactly which companies to invest in. Apple, Tesla, Amazon. You're in the driver's seat. That gives you full control. You decide when to buy and when to sell. You can chase trends or invest in companies you personally believe in. You have the chance to outperform the market, big time. But this control comes at a price. You need to research company earnings, management, industry trends, and market sentiment. One bad decision, one poor earnings call, and your investment can drop fast. It can be emotionally draining, especially in volatile markets. In short, individual stock investing is like flying your own plane. You can go anywhere, but you better know how to fly. So, which one is better in terms of simplicity versus control? If you value peace of mind, minimal effort, and broad exposure, index funds win. If you love digging into companies, enjoy the thrill of the market, and want to build your own path, individual stocks might suit you better. But remember, simplicity is often underrated. In the long run, many professional investors underperform the market. Index funds quietly win the race, with less stress and more sleep. Let's talk about something every investor, new or experienced,